Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Happy Sunday. Put up the sector overview a little bit ago, gave my thoughts on that. So if you are interested, please consider tuning in. Newer people, please do consider subscribing, hitting that like button, and ringing that bell. All right. Good afternoon, Davey. Good afternoon, Patrick. Yes, hope everyone had a great weekend. It is a nice day here. I'm glad it's a nice day up north for you, Patrick. Good afternoon, Sashi. I love every day the stock market isn't open. Is that just a temporary thing, George? Hello from Vegas. Options 22 in Vegas. All right. Let's get down to it. All right, new month. By the way, just had just announced. Yes, we still have potential capitulation signals. That doesn't mean it has to happen. Again, that's a potential. We do have a potential double bottom in the S&P, and there's a potential the trend can just continue in an orderly manner down. Okay. The trend is still down. Let's get that off the table. Now, also to head off some stuff, yes, you do have a lot of lows in October going into year end. You also have a significant number of bear market lows in this month. That does not mean if we get a low, even a capitulation low, that is the end of the bear market. So, just getting all that out there. A capitulation bottom also is more of a medium-term bottom. A double bottom could be a short-term bottom. Neither of them have to happen. But I know we'll start hearing repeatedly how about October will be the lows and everybody will be calling the lows and the end of the bear market, even if it's not. And that doesn't mean you can't get a nice rally. It just means, hey, you got to trade the probabilities. And if things shift, then we will shift. If they don't shift, then you know what? You can keep calling. June was the low. The same people are already calling for lows in October. We don't even have a low yet in October. And they're already calling for the lows. Just like people are now calling for the Fed to start pivoting based off the fact that Credit Suisse is going to go under. Can Credit Suisse go under? Yeah, their book is horrible. Just as Deutsche Bank could go under. Those are the two that have been on my radar screen for years. I was talking about Deutsche Bank, and their book is absolutely terrible, and I've been talking about that even before COVID. So could those go under? Yeah. Does that mean the Fed has to pivot? No. Does that mean they could get bailed out in Europe? Yes. Could it have ripple effects with the market? Yes. Does that mean the Fed's automatically going to pivot? No. Okay. Let's get all these things out because FinTwit. Geez, Credit Suisse is going to go under. It's the bottom. Fed's going to pivot. Just go ahead and buy now. Really? Okay. Everything's always the bottom. Hey, Anissa. How are you doing? This year, even when I win, it's stressful. That's the nature of a bear market. So, tomorrow, this is again another week filled with Fed speak. Week filled with Fed speak. There we go. They're just not going to stop. Tomorrow, yes, we got Bostic speaking. We have global manufacturing PMI, the final numbers. I don't. The big thing to me is if it tips into contraction or stays above, that's the 50 mark. Forecast 51.8 at 15 minutes later. So 30 minutes after the open, you have the manufacturing PMI still expected to be in expansion, 52.2. What will also be interesting is look at the ISM manufacturing prices. Then we have three more Fed speak. Tuesday, 1, 2, 3. Fed speak starting before the open. We got factory orders month over month. prior was -1. This one forecast to be back in expansion territory. Then we have 2 more Fed speaks. Wednesday, besides the mortgage stuff, we got ADP numbers, minor, but more important to me is the S&P Global Composite Services, and then we have ISM non-manufacturing. Especially this one's going to be important because that's actually, if it stays strong, reinforces the Fed's ability to hike continued more aggressively. And pay attention to the price aspect again, especially since we had Friday, the PCE numbers that were backwards looking were still very, very strong. I agree. The Fed's not going to pivot until we have a major thing, and even a ripple effect into the investment banking sector might make them ease up a bit. But unless you have a bunch of things going under, there's no pivot yet. It's just this wishful thinking. Then, by the way, you got more Bostic speaking on Wednesday. Thursday, continuing initial jobless claims. They've still been strong, even though our numbers on a percent increase showed that we should be tipping into a recession sooner rather than later. These numbers can stay up. Remember, employment numbers are lagging. More Fed speak. The big thing is Friday. Why is the big thing Friday? Because you got non-farm payrolls. Remember, the Fed has 2 mandates. Employment, price stability. Well, they sort of blew it on price stability with inflation. Even though they were targeting higher inflation, they were not targeting this higher inflation. Then they've already stated they can withstand even to the mid-4s of employment upticking. Now, we know the next Fed meeting is on November 2nd. This is the last non-farm payrolls before the meeting. So this is the last major input. Yes, there will still be the initial and continuing jobless claims, but this is the last non-farm payroll because the next one comes after their next rate decision. So do keep that in mind. A lot of people will be focused on it, and we will too. So that's where that stands. And then, of course, more Fed speak. Wholesale inventories, more minor, but inventories, it's also with that Atlanta Fed GDP model jumping so big. Part of it was, inventories are increasing. Now, there's normally inventory in a normal market or after a recession. Inventory increases are good because, hey, that means we're building inventories to sell to the consumer. However, there can be an aspect of inventory that's building because you're not selling goods, and that's what I think these are. So wholesale inventory is building now because remember, even over the summer, things like Target said, hey, we got to liquidate more of our stuff. People just aren't buying certain things, more of the discretionary stuff because of inflation. So even with the holiday season coming up, wholesale inventory building, to me, is not overly bullish, but will contribute to higher GDP numbers. However, that's because it's not taken within context. All right. In case you forgot, Friday was pretty red, especially in the mega caps. FOMC has been pulling back on that 75 basis point hike, but still favored versus the 50. And we are still, it's Sunday, October 2nd. There's November 2nd, so we're officially like 1 month away. Not in terms of trading days, but in terms of calendar days. We are to ignore the yellow or the green line. We're actually, last price is 36. This was not updated. They don't update it till some other time, but it wasn't updating Friday evening. It's at 3,600. We are still deep in negative gamma territory. Volatility up and down. Fear and greed, extreme fear. People are wondering why I talk about this as a potential reversal. Well, if you come here, this is a CNN business, which this is a great free tool to monitor. Why? Does that mean just because it's there, we automatically assume a bottom's in place? Does that mean it has to be a long-term bottom? No. That means we're going to use the technicals to determine the kind of bottom it is. Here's why it's useful. Here's the extreme fear line. Okay? I wish I could draw something on here, but I can't. You might not be able to see exactly the little dotted line here, but you can easily call up the fear and greed index and go to the timeline. When it gets below this area, and then you can match this up with your charts, once you start getting strong reversals, this is also why we need a technical pattern, not just a reversal, because you can get the little blips in here. But a strong reversal in the fear and greed index combined with a technical trigger signifies a more potential or a more significant bottom. The last one, we were down here. You see, you had a higher, we had back in May. Then we actually had a divergence with a spike back below there in June. We formed that significant rally in June. Was that the absolute lows? No, because we've broken the new lows. We're back down in this range again. We've been in that range in January. All right, we were in that range that next year. That's why it's something to watch for input, because all the people even calling for short-term bottoms, when it's all the way up here, not as likely in a bear market conditions. By the way, I'm watching for really this long term. People ask why I show the current market valuation on the current marketvaluation.com site, because eventually we're going to see it get to undervalued in my mind. Let's see where we sit. Let me get caught back up. VIX was 35 in June lows, and last week 31. Degradation. Example, I don't know what you mean by degradation. There's just not a lot of fear in the market yet. So, if we do get a potential capitulation move, which still is because of market internals and other components that feed into a capitulation study, things are set up for it. It doesn't mean it has to happen. And an orderly sell-off, even a pretty bloody down day, does not mean it's capitulation. All right. So, and if we do get capitulation, you will see VIX above 35. This week is set up to be a potential crazy one. I think, yes, if it's not this week, then, and the instability continues, the first couple weeks in potentially October could be very significant in these markets. But I am prepared for volatility, and I'm prepared for a huge push down. Now, we also have that double bottom, potential double bottom, and we'll go over that. Does that mean if that triggers, you could have that trigger with no capitulation, and that would actually signal a shorter term bounce. Capitulation is more of the medium term bounce. Generally, capitulation in bear markets, and I'm not talking about a final capitulation move, although if people spot a capitulation move, you'll have the drums banging that everything will be in. And I'll get to something else in a second. By the way, for earnings, nothing tomorrow. This is a very, very light week. The only things I'm interested in is Thursday. We got McCormick and Constellation Brands, mainly for consumer from the food aspect and inflation, how that's affecting both those. That's about it. Tilray will be interesting just from the of the pot stocks, but that's minor compared to market moves. Well, Friday will be non-farm payroll. Also, I want to bring up something because we talk about probabilities here all the time. Probabilities. Where is my? Hold on, I got to move something around. Where did my thing go? I had it right here. Where did that go? Oh boy, I don't know why that is. Here it is. This was put out. Let me just rearrange stuff again. It got buried back there. This was put out by Luthold Group, and this is from September 26th. And yes, the PEs dropped slightly, but this is bear market bottoming PEs. Okay, so these are the major ones, and you can see the bottoming PE ratio. I think the lowest one was from 2020, but yeah, that was technically a bear market, the shortest bear market ever, because we essentially unleashed the floodgates of money. But even the PE then was 18. So yes, we could get a theoretical, the market could end this month. We could get a move, but you'd be ending this at a insanely high PE ratio, substantially higher. Even if you discount the one from COVID, the next one was 2002, which was 17. So, based off of this, from a fundamental, and I'm not just talking probabilities from a technical standpoint, we watch probabilities from a lot of different standpoints. And it's not just this study. From a lot of fundamental perspectives, is this the bot or the potential bottom? If we bottom, unless we have some massive downturn in the next little bit, is this most likely the bottom? No, it's most likely, if we do get a bottom. Don't mix up the two. All right, and we get the signals. So, what I am talking, let me get to some more comments. Why do I focus on probabilities so much? Because you're better to align yourself with probabilities than to try to trade against the probabilities. At the end of the day, and I'm going to go on a little tangent right now, I see the majority of people, especially beginners to intermediate people, investing and trading. You know what they're all on the lookout for? The next system. Give me the next system. They're looking, they scour the YouTube channels for the system. They look at they get the emails. We got the magic system. Can systems help? Yes. Because a good system will put the probabilities in your favor. Although, see, people also want just the high winning percentages because they don't ever want to be wrong, because they don't ever want to lose money. Well, losing money is a part of investing and trading. You're going to take losses on investments and trades. The only way to ever avoid that is not to invest or trade. Now, I've seen people, well, I don't want a system that is below 50%. Well, if you also have another component to systems, you have reward to risk ratios. So if you have a very good, like I've seen a fantastic system that only hits, a long-term system that hits 35% of the time winning. But when it wins, it has a reward to risk ratio of over 20 to 1. So you have massive, between the win percentage and your reward of what your outcome is when you win, you have a significant advantage. Why do most people not want to trade that? Because they can't stand small 65% losers. It's psychologically damaging to them. More people would rather have a lot of winners. They win shop to the extent they don't even have the long-term expectancy of trades in their favor. So yeah, they might win more often, but their outcome's not positive. Net. Yeah, they can say, look, I got 9 out of 10 winning trades, but I still lost money, or I still broke even, or I didn't make that much. Okay, because their expectation, their system expectancy is out of whack. Why do I bring that up? Because we trade with the probabilities, and we're not, a part of the thing is to trade with the probabilities is also, I should say, we trade with the trade expectancy, but more people won't get that if I state it. And part of trade expectancy is the probability. So let's just assume with anything I cover here, because it is true, the reward to the probabilities are above 50% because psychologically that's better for people. And the trade expectancy, you want, if your system's at 50%, you need at least 1-to-1, and that's not considering slippage or commissions or fees. So assume that everything is above 1-to-1 and the probabilities are above 50% because your trade expectancy is going to be positive then. So why do you want to trade with the probabilities? Because I don't want to be trying to, if the probability is 20% for a long-term up move and 80% for still a long-term down move, I don't want to be trying to guess every bottom is that 20%. Unless it's going to be the absolute bottom, but the percentage of calling that absolute bottom is very low to get it down to I bought the exact day of the low. Because you could still buy in a low range. For example, there were people on this move down that were people I know who were, it's the low, it's the low, it's the low. They bought in here, you got the flush out move, they got stopped out, then it rallied. So because they were off by a few days, they missed out on this because they're like, oh, it wasn't the low, I'm wrong. And then they missed the rally because they didn't buy here. They bought here, got stopped, and boom, missed it. That's why buying here, you're better to, at least, okay, look, break above. There are buy signals in here, retest, held, even wait for the next breakout. Fine, you have the probabilities more in your favor that it's a shorter term low, and you're capturing this move. You missed out on this little part. Who cares? So, do we have a potential double bottom? Yes, in the S&P. Is it still valid? Yes. Do we need a close above 37.51.25? Yes. Is that a long-term bottom signal? No. It's actually a return. Even if you went with the more aggressive targets, I think we have something. Even if we went with the more aggressive targets, what's this? Prior resistance, support, support, resistance, return to that if it was triggered. Conservative targets just in front of that. I choose conservative targets because it's against your long-term trend. Is this a long-term bottoming pattern if it were to trigger this week? No, it's a short-term pattern. I already went up also last week how to ratchet up your retracement harmonics in case you want to try to roll something into a higher. Now, if we capitulation move, which we could potentially set up for, does that mean if we orderly trade down that there's a capitulation move? No. A capitulation move would be a sudden and sharp move down with horrible markets internals that's either reversed on a single day or a double day. You're going to want to need your capitulation levels to get below about 34.50. We're still at 36.01. 34.50 even on a percentage basis, and this is a 1 day at least push down that can be reserved. But at this point, based off where we closed on Friday, you need a 1 day drop. So this would be for tomorrow to about 34.50 area, which is nearly down 4% in 1 day. So it's not just an orderly decline. It is and if there's just let's say tomorrow we puked and closed at 34.50. It's still, and we closed at 34.50. That does not mean that was capitulation because you need a reversal to trigger the capitulation. Because a capitulation move can turn into a multi-day event. So, and actually it can theoretically turn into a crash event too. So do keep that in mind. I'm trying to lay out scenarios. So if we woke up tomorrow, let's say we woke up and the S&P was halted because something happened overnight in the European session, and we woke up and the market's halted. Does that mean we just go in and say, oh, Mike said, we could get a sell-off, could be capitulation, let's just buy the moment it reopens? No. No. We have to wait for the signal, which doesn't mean you're trying to buy the low tick. That's absurdity. All right, so we do have a potential I'm not even going to say setup, potential conditions for a market capitulation this week. We do have a potential pattern that has not even been confirmed yet for a bottoming pattern. Can neither of them happen? Yes. The market could just orderly sell off. We could close the week at 34.50, and neither of them could happen. And there is no buy signal. I have to keep explaining this because for some reason, a lot of people don't get this through their head. That's the bull case. The bear case, which we don't have anything to contradict this move. Yes, we do have potential divergence set up. We do have potential double bottom. Could those be off the table by tomorrow morning? Yes. The next level's down, 35.78, 35.57. On a weekly basis, we are closing in on that 200 week, which we can see potential bottoming movements there. So we will be on alert even if it goes through it. It's an area, not a brick wall or a concrete floor. It's an area. So we will watch out, especially with weekly cycles still at the bottom. Those are the key levels I will be focused on tomorrow morning. If we did go into something more substantial, the next major is 34.92, right in front of 3,500. I will be watching 34.92 to 3,500 if the bottom fell out, or if we had theoretically see Credit Suisse blow up. Whenever I say CS, my sister and her husband were investment bankers for CS First. Well, they were investment bankers for First Boston, which was then bought by Credit Suisse. So I always think still CS First Boston. So I always think of First Boston, which you can Google First Boston because that was an investment bank that was bought out. So if you hear me say like something like, why is he talking CS First Boston? It's because that's why. So those are the major key levels. That's what I'm focused on. Over to the Nasdaq, we broke below, and I already talked about this Friday afternoon. Somebody asked to do these studies back with the 2008 lows. I'm sorry, I forgot who that was. I could have to review the live stream, which was a good exercise. Am I prepared for a potential move reversal since we closed below that in the Nasdaq? Yes. By the way, if the Nasdaq closes on a weekly basis above 11,613.50 this week, it is a weekly reversal buy signal, a reversal divergence signal with cycles at the bottom also. And it would be that snapback above the 200, which, if we're going to get the snapback move, you can see we had a couple. You can get the snapback move, like right before March 08, before the big back, got the little snapback move. You can get some snapback moves even after the bottom was in. Is it breaking down again? Snapback. Is it breaking down again? Snapback. Is it breaking down again? Snapback. I am watching for the snapback move. Does that mean we just buy it? No. Is there a little daily double bottom in here? No. This is not a potential double bottom. Is there a potential weekly major double bottom? Yes. Are we a long way off from that? Yes. Interesting enough, just to point something out, would that be a major bottoming pattern? Yes. Would I need a weekly close above 13,740? Yes. Long-term system, just for your to look at something, we'd even probably get the long-term entry before that, or the medium to long-term entry before that. So are there, but again, that would be buying the probabilities once they're reestablished, not just trying to pick a low. So no daily little bottoming signal besides some divergences. Yes, there is. If you had the snapback and you got tomorrow's close above Friday's high, that is a very aggressive buy signal into the weekly or into the daily rotation zone. Next key areas, you can see the little areas still I have on from Friday. We came down to the breaking the flag pattern. We came down, hitting the harmonics area. I am updating to the more substantial. Just double check something here. Yep. The more substantial lows. So what does that give me? This gives me continued down move, 10,910. Significant bottoming area, 10,741 to 10,683. And then major, should we go into disaster capitulation mode, 10,450 to about 10,350. Makes sense? Waiting for Walmart Black Friday in context to what? Oh, waiting for Walmart Black Friday for the sales? I don't go out on Black Friday, but I will wait for some results if we get bullish signs before there. And I talked about that in the sector overview. If I was looking to buy some retail stuff, if we get some bottoming signals, especially a capitulation signal, go back, watch the sector overview. I will look to some retail stuff, but I would also generally look in these market conditions to unwind it going into the holiday sales reporting numbers, which are after Black Friday and Cyber Monday. Just finished the sector overview. Everything is in sell mode except for commodities and energy. Yes. That's also why I listed, if we do get capitulation bottoming patterns, what I'm looking for. All right, because if we did get capitulation buying, there are still things we could get into, and I told you what sectors I was more so geared towards. Because again, you could easily bounce, even with medium-term capitulation bottom, you could bounce for 8 weeks and then roll over and still have a bunch of these sectors in long-term sell mode. Don't mistake shorter-term rallies for long-term bottoms. Long-term bottoms are only seen generally in somewhat hindsight. You can get even on longer-term systems, they're not going to tell you based off the exact day. Yes, a capitulation, why it could be a medium-term bottom is because generally it is a medium-term bottom. But a medium-term bottom isn't necessarily a bear market bottom. So you'll have a bunch of people, if we did get a capitulation, will say, see, that's the low, that's the low, that's the low. Just like the bunch of people who said back in June, that was the low, that was the low, that was the low. And then all of a sudden they disappear once there's new lows. Then they get another, say, oh, this is the low. Well, what about all this? What about what happened? That's why I'm trying to be not mislead people and say you gotta still look at probabilities. A low doesn't have to be the low. No, dollar rise is not directly always proportional to stocks. Okay, don't. That's a short-term conclusion from limited, very limited results. All right, so you cannot make that conclusion. Don't say, "Oh, I'm projecting the dollar to go up 10 more percent, so stocks should go down 10%." That's not how it works. Oh, wait till you get to Tesla sub 50, George. By the way, Tesla did release their delivery numbers, which were bad. Oh boy. And now I'm going to get all the little excuses of why. What will signify the capitulation move in my eyes? I gave you the price areas. Everything else is then based off of advanced decline, market breadth, VIX, the tick and trin. There's not just one thing. Okay, Ted? So I guess you'll be forced to tune into the channel. If volatility means either direction, why is VIX called the fear index? Well, because generally, when does the VIX rise? Based off of sell-offs. Why? Because what do people do? They rush to buy protection during sell-offs. But that's why it's called the fear index. However, and the generally fear comes in the overall broad market. The VIX we've seen go up in the short term, even when the market goes up at times. We saw it a couple weeks ago. But generally in the longer term, the VIX goes up when there's major sell-offs. Is why people rush to protection. When they rush for protection, also market makers tend to sell it at more expensive. The only thing they could do is jack up implied volatility. What is VIX a measure of? It's a measure of implied volatility. So that's why it's called the fear index. However, just to look at even stocks. Now, stocks are you're going to have your own implied volatility for stocks. When can you see implied volatility go up? You can see it going up into earnings reports on stocks, even if the stock's not going down. Why? Because it's uncertainty. So volatility can go up on uncertainty. So even on bullish moves, volatility can go up if it generates more uncertainty. However, with the broad markets, when you see spikes in volatility, they are generally related to sell-offs. That's why it's called the fear index. Mike, curious, in your opinion or perception, where do you ultimately see fair value for Apple, which would be a good indicator for me that the overall market value? Where would I see Apple? Apple is still PE of 23, which is an interesting thing because I actually think it is a good gauge of what I had up before with that little, image I had up before. It actually is a pretty good barometer. That's a smart question. Remember, look at the 23.4. And I mean, yes, I know this is a couple days old. We're on October 2nd. This is September 26th. It's not that far off. You're still at 23, roughly, even with the sell-off on Friday. Look at the P to E of Apple, 23.54. I think it's more in line. That's why I think it's that is a smart question. Where do I see this? I've talked about this before. I see it sub 15. I will get more interested sub 17, and that's not based off this chart. You can go back into past live streams from months ago. I talked about that. For the Nasdaq, I get more interested sub 17. For the S&P, sub 15. Apple is a good barometer. I will get more interested sub 15. Can it go lower than that? Yes. But I will be more interested from a fundamental market perspective, especially when Apple goes below 15. And for the people who says there's no way that's going to happen, well, we'll see. And from a price perspective, I'm easily longer term watching, and that's even after we could get a bounce. Apple could go on another absurd rally, but longer term, before we see the market, I'm expecting at least to return to 117. At least. So that's the answer to your question, options 22. What is, Vince, what is fake crashing? I don't know what fake crashing is. Even Teslas don't fake crash. But what, is that a Tesla in your picture? They actually really crash. So I don't know what fake crashing is. That's my little dig. Had to do a little dig on Testum. What's the name of which system? What, the system that I was talking about with 35%? You can't. There's no way you can buy it. I don't know who would have access to sell it. I know a few people have access to it, but nobody's selling it. If you're referring to that 35% system I was talking about. By the way, some of the greatest long-term, especially futures traders, trade on long-term systems that are below 40% correct, but when they're correct, they are really correct on a reward to risk ratio. So then they don't mind taking a lot of stops. A lot of long-term future systems are correct less than 50% of the time, but when they're right, they catch a huge move. But people don't like to trade them. You're welcome, Christoph. Hey, Amit. Yeah, 94% of what S&P? Well, there's what I saw is there's only 13% of stocks are above their 200-day simple moving average. But you know what? When we've had long-term market bottoms before, that's in the single digits. So that can keep getting worse, and worse. And we've also come from massively overvalued conditions. So the 200-day moving average is still absurdly high based off the absurd run-up we had from the COVID lows, from the money dumping into the system. So we can see extended amount of stocks below their long-term moving averages. Well, I think I gave Apple. Apple, by the way, closed below 62.5. So next key level for you in Apple is roughly 135, 134.77. But anywhere between 134.77 to 128. That's the next levels you have to pay attention to for Apple. Oh boy. Really? And I'm sorry I scrolled through these. Oh boy. Let me just scroll through some of that. If we hit 320 on SPY this week, are we in longer term bottom or medium term bottom? You just can't, again, let's wait for price and see. Part of it's not just a price, it's how you get there, Sashi. If it was just that simple, if we hit 320, and by the way, you can get capitulation long before you hit 320 in the spiders. But it's not like, all right, oh boy, if I hit 346, is that capitulation? It depends how you get there. If you have 4 days of orderly sell-off, no. If you have 1 day, possibly. It's how you get to a destination, not the destination. So you can't, I'm sorry, I'm going to be a little snippier with comments at this point because some of the longer term people who've watched this channel should know this. It's not just a price. And did we even get a revert? Let's say you hit 320 and there's no buy signal. Is there a bottom? No. Mike, I came in late and we'll rewatch. I'm sure you touched on it, but after Friday's close, the 4-hour double, on which, again, please put in what which symbol you're talking about. Don't just, I look at 100 charts. I'm trying to focus also on the daily stuff for this. So your levels on the SPY, by the way, since I am here, your key bigger levels, 352, 346.50 to about 343.30, and then 332.24. Your major resistance is now roughly about 363.50. Any bottoming pattern on the spiders is not valid. There is no bottoming pattern besides a potential %B buy, which would be on a close above Friday's high, but there is no double bottom. And yes, there is also a potential divergence setup. Those would be for bounces into the daily rotation zone only. Let me get to the Qs. The Qs. Hit the next harmonic, 267.21. The low is 267.10. Then there is no double on the Qs. There is a %B buy, sorry, bug in the room, above Friday's high on a closing basis only. That would have to be very iffy because of reward to risk. Just because there's a buy pattern is something else. Sometimes I just say there's a buy pattern. You always have to take into account reward to risk. If my target's the rotation zone and the buy is triggered when it comes in contact with the rotation zone, you don't have really good reward to risk. So just because just remember, there's doubles that are triggered. I've seen doubles triggered that you couldn't get into, because they went to by the time they closed, they were at the final target. So yeah, they triggered, but your reward to risk was 0 because it went to the target before you could get in on a closing basis. So just because there's a trade trigger does not still mean there's a trade. Another thing people don't get. Close below, also on the Qs below. Let me clear up a couple lines. Close below not just the June lows, but also close below June closes and a close below major support. Your next key level in the Qs is 262.50, then 260.09. Your minor levels, since you've already hit your reverse harmonics, see, those are done. You can use, if you needed to use more significant, you'd have to use forward harmonics. If you're looking for the more minor levels, you'd use these forward harmonics, which, again, you hit the first one on Friday. The next one would be 265.74. Based on the rising VIX, global markets, and all the stop losses placed across all stops, the market it is highly probable for the capitulation we're waiting for, or for that flash crash. Again, you can have a minor crash that turns into capitulation. It's not just all the stuff you listed. There's major market internals that set up periodically for capitulation moves. We are in one of those areas right now, and it does not have to be a crash. It could just be a capitulation. A crash can also be a more than 1 day event, and a crash does not have to end in capitulation. So we are set up. We don't have to have it. Okay. Mike, given the oversold conditions and how it can go further, possible relief rally than rollover. I've listed the potential buys. The best potential if we do not have a capitulation move, and as long as this is still in, besides my little percent B buys, which would be a very short-term bounce, which can always roll into a bigger bounce. The only other strong pattern is this potential double in the S&P. Other than that, the trend is still down. What's going on at Credit Suisse? They have a horrible book, and by book I mean their structural investments are really bad. They're a investment bank. I put them and Deutsche Bank at the bottom of the list for smart investment banks. They have, and based off of what they've done and the rumor mill out there, and even stuff before this rumor mill. First of all, the two ones I love to short are Deutsche Bank and Credit Suisse. Now, just because everything is going on in the markets, if they don't have their order or their books hedged correctly, their structural, if they have them not structured for adverse market moves, they could potentially run into liquidity events. So that's what's going on. And there's a rumor mill running around that there's a potential liquidity event at Credit Suisse. Now, it's also a rumor mill. I can agree that I've seen with what they've done in the past that they are at risk for those kind of things. But I have no insight whether that is reality. I can understand it because of where they are at risk. Hey, Mike, could you touch on some stocks you're keeping an eye on for longer term buys after the market finally bottoms? We'll do that in a different session. I am already going an hour with this one. Average bear market drop for the last 6 drops was 41.5% from the top, putting the probable drop to 2,800 for the S&P. And now, Daniel, do the average drop for, oh, you did do for bear markets. And I actually have it the average slightly higher than that for bear markets over the last, I forget how many years, but it's over the last 40 years. It's slightly higher. That might be including the Nasdaq too. I'll have to double check. But yeah, we're not there yet. And that would be in recessions. It's higher. So based again off probabilities and average moves, and average can undershoot. However, I believe we will be going into a significant recession. We should see still more substantial downside. Again, can anything change? Yes. Am I going to bet against the probabilities? No. I'd rather play the side of probabilities and caution. And if the probabilities shift because we get other things shift or other things trigger, then I will shift because I don't need to call a bottom. Based on the spiders, thank you. And I'm not picking on people who don't put in the signal. Or the symbol. I'm just reminding you to please put in the symbol because I cover so many things, and then I catch up on the comments. So you can see here, doubled. This went too far down on Friday. And for anybody new here, just because you have a potential reversal signal, means it never has to trigger. There is a potential, there is a confirmation, and then there is a trigger for a lot of systems. Other systems just have a potential, then a trigger. They don't need the confirmation. Potentials never have to manifest and become invalid before they ever trigger. Tesla. Who watched Magic Robot Day? Tesla delivery numbers were 340. I don't know exactly. 340, about a 20K miss to consensus. You have the excuses coming out already. Tesla, based off of Magic Robot Day and the miss, expecting lower prices. We closed below that 265.73 level. Minor target for tomorrow is 259.50, 253.71. I'm focused on the gap fill back to 247.50. Below 247.50, remember your next key thing is from the run-up move. Come on, mousy. Don't wear out on me now. The overall from the run-up move, your key level, look at that with the close. The 62.5 right with the close, 247.29. You get a daily close below 247.29, 220.33 is the next target. Those are your Tesla numbers. For the bull case, 270 is major resistance. If you did get above there, next level would be about 275 and then 279 on any rally attempts. What would be a potential short entry signal for the ES before the beginning of this week? What I didn't mention, and I should have mentioned it in the sector overview, is this is not the time to be putting on, and for me to be putting on swing trade shorts. This would only be short-term shorts. That sounds bad. What would need to break? Well, the first sign is going to be to this evening below Friday's lows, especially on a break. So watching when the futures markets open in 1 hour from right now it's 4:03 Central. Markets open at 5 Central. I'll be focusing on Friday's lows, especially with the close being within spitting distance of the lows. On a break is an aggressive short. The more conservative short would be a break, a retest, and then the rollover play from Friday's lows would be the more conservative entry. And that's where I'd use 35.78 as my next target for at least rapidly decreasing a stop. Everything trading to the short side is not for like, oh, I'm going to be in this short trade for the next 2 or 3 weeks. This is, I'm going to be in this short trade as long as it lasts, which could be a capitulation move. So it could be a substantial short trade, but this is not where I'd be putting on shorts. Remember, there were signals on this way down. There were plenty of sell signals on the way down. This is not where I'm trying to put on a multi-month short. Remember, we had the head and shoulders up here. You could have got short back in the end of August. These were the shorts. This is short-term shorts, not long-term shorts. We've already been to the long and medium-term shorts, or actually more medium-term shorts. This would just be, I'm trying to catch something this week, potentially at most. So that's how, that would be the overnight sign. Now, if we get a rally tomorrow, there might be some other setups, unless I trigger a short-term buy. Thank you, MJ, for reporting that. Thank you, Ted, for reporting it. So does that answer your question, Christoph? If you have to be aggressive, and these are, this is not the time. I'm not putting on a short here and giving it all the leeway to above the highs from the 28th. This is, I'm giving it a little leeway. Little leeway. Unless we start getting major momentum down, especially during the U.S. session. Were we just getting longer-term data for Tesla on the higher elevation than recession? Car stocks don't do well during a recession, so more new data and confusion. Plus, when will Elon sell again? If you want to talk Tesla, there's a reason they're having the earnings report early. This is, I think, one of the earliest earnings reports they have scheduled. Why? Because it's before the ruling on Twitter. He has to get the earnings report out of the way before he can sell. So if you're looking, when could Elon possibly sell if he's forced to buy Twitter, has to be after the earnings report. Cannot sell before then. So there's your answer. Now, separate from Tesla, yes, in a recession, auto manufacturers don't do well. Why? Cars are a big ticket item purchase. Now, you've got to give automakers a little more leeway in going into this potential recession for at least the short term. Why? Because of the low inventory in cars, and people have still been put in a position where they're playing catch up. For example, with myself, on our car, I had the ability to extend the lease for 6 months and pay my current payment and not turn in my car. Why did I take advantage of that? Because the inventory is still so low, I could not secure a decent deal. So extending it 6 months gives me more of a window to secure a better deal, especially if we're going into a recession sooner rather than later, and lets inventory catch up, especially with a vehicle slowdown. But there's not an overall glut on cars just yet. So keep that in mind from playing automotive stuff. By the way, has anybody playing the Porsche IPO? Or, well, this Porsche spinoff. It's not really an IPO. I wouldn't put it past anything at this point. Strategy. But I can't predict that. I mean, yeah, anything can happen. Would it surprise me? No. What did you do in the beginning of your trading journey to hone my skills? Focus on limiting losses, putting the probability in your favor, and trading with the probabilities. This is what I keep stressing, and not trying to be right. Trying to be right is an ego game. Trading with the probabilities are putting that in your favor. And the more so, you can also study behavioral finance, even read books on behavioral finance, because the natural innate abilities is why investing is so. Investing, at least you have more leeway because you have the long term, and in stocks it's even more leeway because you get the long term upward bias. Short term for trading, you're fighting the inherent nature of the human psyche. So if you want to learn more about that, and luckily in the last number of years, there's been huge work on behavioral finance. Back when I studied, it was very obscure. The best way to do it, though, is still focus on reward to risk and trade expectations and stop worrying about being right on any single or even a few trades in a row. You've got to learn to put probabilities in your favor and to trade smaller and get confidence. So, and also don't overtrade and don't vary bet size unless your system calls for it. Don't try to pick which trades of first hand are going to be winners because you don't know. The worst thing is for people to, I think this one's going to be a winner, or I think this is the major bottom. I'm going to up my risk from 2% per trade to 50% per trade. Then they happen to hit one, and then they think they're the genius, and then they slowly give it back over time. You are your own worst enemy in trading and investing. The inherent flaws and the psychology. And don't system search. Find decent things that can put probabilities based off your, not only your probabilities, but your reward to risk, because they're not inseparable, as I've started off this live stream with. They produce trade expectancy, which you better have a positive trade expectancy. But stop system shopping. Because you want to know something? If you don't have good if you don't have good money management, you vary your bet size based off a set of fixed probabilities. You can blow up any great trade expectancy. You skip trades. Oh, I don't think this one will work. Well, okay, but why? You didn't know if it would work. You don't know which times the probabilities are going to be on the wrong side versus the right side. Do you? You don't. You can't answer that, otherwise your system would change. I mean, that's the potential double bottom. No, there is no potential double bottom. Oh, on the spiders? No, it's not on the spiders. It's only on the S&P. It's not on the spiders. If you're trying to play it in the spiders, you'd have to wait for the futures to signal it. I don't have that in front of. It's. This was the one, I don't know what it is. Remember, you can trade like Interactive Brokers, which I have an account with. I can trade foreign stocks. So I can trade them. This is the only listing I had. You don't have to trade a stock just on the US exchanges. In certain accounts you do. My biggest mistake, remember to take profits. Yes, and everything you're not trying, remember, singles and doubles make you successful. Everything's not a home run. Why do we talk about targets? Why do I have targets? Does anybody know why I always list targets with things? Because what are target areas? To raise stops and or take profits. And naturally, if you raise stops, if you keep raising the stop at target areas, at some point, your stop's going to get hit and you're going to be forced to take profits. If you don't have targets, how do you know where to take a profit? There is method to this absurd madness on YouTube. Always be closing. I'd say it's always be adjusting your position, stops higher for a long or stops lower for a short, and or taking profits. based off of your targets for the trade type you're taking. Because you have to keep it, again, there's the thing of you can take profits too soon. I see people, the moment their trade goes in their favor, they're like, I'm out. I got my profit. Yeah, but then you take bigger losses than your profits, and then you're not good. You have to weigh the probabilities and your trade expectancy. That's where reward to risk ratio is so key. And if you don't know what I'm talking about, then you have a huge gap in your trading. Because you have to align probabilities and reward to risk ratio. That gives you trade expectancy. And if you take profits too soon, you cheat your reward to risk ratio, and then you can turn a positive expectancy into a negative expectancy, which means you do that over the long term, you will go broke. You will run out your trading account, even if you're hitting. Look, you take profits way too soon, you could be hitting 70% winners and go broke because your losers are outpacing your winners. Even though you're winning more often, you're taking a lot bigger losses, which offset multiple wins. Mike, you always cheer me up. Love your expressions. Well, I'm glad I cheer up somebody. First prize a Cadillac, second prize a set of state knives, third prize you're fired. Yep. Do you think the SPY does go up in the morning? I don't even know how to answer that. I'm thinking low 360. Yeah, I need a signal. Otherwise, it's just a guess. It could. Your key resistance, your minor resistance would be the June lows, which, do I have a signal yet? No, not especially based off of Friday's low. Friday's close. Could I get one a couple hours into the trading session? Yes. If you are asking me, would I bet? I don't have a bet. I guess if I had to bet, I would still say the trend is still down till it reverses. But in what time frame? Does SPY go up in the morning? What morning? European morning? U.S. morning? Because remember, it can trade pre-market. But if the overnight session trades up with the futures, the SPY's going to open up. I don't look at stuff. Do I predict? No, because it would just be a gamble. If you held a gun to my head and said, if you had to guess, I'd bet on lower prices just because the trend is still down until it proves itself that it puts in some kind of bottom. But that's a fool's game to try to predict something without any kind of signal. For example, 5-minute chart on the spiders. You tell me what this pattern is. Closing on the lows. Is that a buy signal? Is there any? Even this gave a bottoming pattern, at least on a 5-minute chart. Is this a bottoming pattern? It would have to at least get above the last bar's high on a closing basis before there's even a potential bottoming pattern on a 5-minute basis. So this is where people tune in here and go, is it going up or down? Do we have a pattern or not? If we don't have a pattern, why would you even ask me? Because it doesn't matter if I've been doing this for 30 friggin' years. I still need a pattern. Otherwise, it's a guess. Are you going to bet money on a guess? Well, I'm not tuning into a random YouTube channel and saying high or low tomorrow. Okay, I'm taking my money and putting it behind what that guy thinks, because they could have 50 years of experience. What's their reason for saying higher or lower? Unless they have a pattern. Based off the close on Friday, there is no pattern. Other than, and buying on a low close on a weak Friday has not tested out to be a sustainable pattern for a bounce move. Generally, you get some follow through. Is it enough that I'd say I'd be shorting the close on Friday? No. Not even in a bear market. Remember, some things there just aren't patterns. So, it's also why I started this out with, if this is not the area I'm looking to put on long-term shorts, this would only be micro shorts. To reiterate, the longer-term shorts, even in your spiders, head and shoulders, back on the 26th of August. This is a gambling short, and at least I need at least some pattern for a continuation play on a shorter term. And that's not based on a close on the lows on Friday. It should still follow through, but that could be a 10-minute follow through. And more so, it's going to follow through on the futures. So that's why I wouldn't even get bank on the spiders. That's why, what am I tuning into tonight? In 40 minutes, the futures. And then we'll see if I get a pattern. Now, to talk about Juan Fun videos, and again, thank you for being here. I'm thinking 360. Well, your key resistance is from the June lows to this key closing area. So 360 to 363 is your key resistance on any bounce. So I do agree with that bounce target area, but that does not mean we have to have a bounce to that area. Put the coffee down. Coffee is for closers. There we go. We got the quotes coming in. That's nothing. Fed has lots of closed door. It's not. People are putting out there was an emergency meeting on the Fed. No, it's not. This is a routine Fed meeting. Okay, there's nothing special about this Fed meeting. Do not buy into that. That was another FinTwit rumor thing. Disregard. Could it always turn into something more? Yeah. Hypothetically, let's say Credit Suisse blew up on Sunday night / Monday morning in Europe. Could a closed-door Fed meeting turn into something more substantial if you had Credit Suisse go down? Yes, but this is just a regular Fed meeting. They have plenty of closed-doors Fed meetings. And this one was already scheduled. It's nothing new. Yes, we still have more room for downside. The trend is still down. Until the trend reverses, it's still down. All right. I missed a bunch of markets, but I'm tired. By the way, just for your tonight, we do have the potential double top. You see the second target is cutting through the thing there, but it is still valid on lower time frames. I would, though, be focused on this 111 target, as I talked about before, and it has not triggered yet. That's something I'm keeping an eye on. I'm keeping a very close look at the dollar index tonight. We could have some more Chinese, well, they always intervene in their currency. I hate the word always, but because they peg it to the dollar. But if the dollar breaks below 111.50, keep an eye on that for a potential bottoming pattern in the stocks triggering We don't have, besides those daily ones, we don't have anything stronger yet. On a rally above about 112.70, watch for a potential breakdown play. Crude, you got OPEC stuff coming up this week. The double bottom played out. So the only key thing is, yes, no, there is no buy pattern just yet, but I will be watching about 83.75. Or a pullback and producing a double bottom, and then we need a close above. If that happens, a close above 82.94, so roughly that 83 level, but there's no solid reversal signal in crude yet. All right, what is Bitcoin? Bitcoin still in its range, gone to sleep. It's going to trade like your other markets. I'm long-term bullish on Mike's blood pressure. Oh, my blood pressure is actually doing quite well. So bullish would be, hey, it's lowering because that's better for my health. Oh, I like the movie quotes, Ted. You don't have to. I'd rather have the movie quotes than stocks always go up or stocks go to zero. We're in a bear market trade with a downside bias. Speaking of long-term patterns, when was the last Black Monday? Well, Black Monday refers to a specific Monday in October. There was only one Black Monday. You're welcome, Anissa. Whispering in the back of the class, Prof is pissed could fail the whole class. If there was a grade given to the class. Prof's not pissed. Prof's aggravated at people not paying attention. You're welcome, Ted. Winner, winner, chicken dinner for which comment, Paul? All right. So, that's where we stand. I'm just tired of inane, silly comments, especially when I take time. If you want to start your own YouTube channel, go start it. If you want to argue with me about silly crap, don't waste my time. Especially since I don't charge for this and I'm trying to help people. Because the amount of time I put into this for the amount of revenue it generates does not come out positive. It actually doesn't even cover the expenses. I do this to try to help people and offset all the other crap out there. And people wonder why I get aggravated. Then I get stupid friggin' emails like, I'm going to unsubscribe to your channel and that's going to cost you ad revenue. Well, you want to know something? You want to know what I made last month on this channel from ad revenue and super chats? I'll tell you, $191 friggin' dollars. I could make more working at Chick-fil-A part-time than I do from this channel. I do it for trying to help people and give something back. So don't send me inane emails. Fine, unsubscribe. I don't care. I lose 3 cents. Whatever. Don't send me inane comments and emails. You know, I just try to help people. And if you don't like it, do your own channel. That's why I'm perturbed. You know, and that's just the way people are. And I'm sorry, there's lots of great people who tune in regularly, and I am very grateful for those people who want to learn. It makes it worth it. But if you're going to come in here and try to piss me off or put in inane comments or not even willing to have a sensible discussion, then I don't care anymore. Because I'm not going to waste my time worrying about what you think. Because it doesn't matter to me. Just like if you're going to say, stop saying guys when could be women tuning in. I know there's women. I use it as a catch-all. If you're going to be offended, go be offended somewhere else. I actually care about everybody who tunes in. But don't send me an email. I'm offended that you use the term guys. I appreciate everyone. I'm not changing my whole language structure because somebody's offended. I'm not changing everything because you don't want to hear me say your comments stupid about stocks going to zero or your comments stupid about stocks always go up, because it is stupid. Yes, it's my opinion. It's also my friggin' channel. I'm not charging anybody here. I probably should, because it would at least get the riffraff out of here. So if you're offended, go do something else. If you don't like what I'm saying, don't tune in. You know? It doesn't matter. Happy Sunday. And I do appreciate people who throw in here, who tune in for a regular basis and want to learn and want to have sensible discussions. I'm always willing to learn. I'm always willing to have a sensible discussion. I've continued to learn. So I'm still learning after 30 years. This is a career that you never stop learning unless you're intellectually lazy. But I'm not going to learn anything from people who say stupid crap, or people who even waste their time. Why are you wasting your time coming into a channel to say dumb things every day? Why? Don't you have anything better in your own life to do? So there. Oh, where did I leave this? Oh, I guess Prof is pissed. See, I'm back to the strategy Freeman. Prof is pissed. We love you, Mike. Well, thank you, Strategy Freeman. Hey, William, thank you for being here. I throw a like on there for you. Thank you. Thank you for your help with transparency. You're welcome, Royal Palms. Thank you for tuning in. Mike's the best. I'm just trying to be here to keep it real for people and not blow smoke up their proverbial butt. Hey, Waka Waka. We missed you. Did you find any good mushrooms, Waka Waka? You tuned in at the right time. Damn, YouTube is a scam for... That's where, people are threatening, oh, your revenue will go down if I don't tune in. Oh, what revenue? Unless I get 100,000 subscribers and everything else... it is a, but you know what? I'm not doing it for that. I'm actually doing it to try to help people, because this is an incredibly tough profession. And there's so much crap out there in BS. I would like to help offset some of it. If I wanted to change my language, I'd go back to work in industry. You're welcome, William. Oh, I do. It's just, you know what? When you get enough of it, it's sort of, it's like nails on a chalkboard after a while. Mike is not a fan of, no, I'm not a fan of that. I'm offended that you're offended, so go pound sand. I don't care if you're offended. I'm not trying to offend you. Get over yourself. Thank you, Anissa. And I'm not trying to offend Anissa by saying you guys, because it's all inclusive. It's just a friggin' figure of speech. Bob is, oh boy, you better say that when Bob's here. This is a career that you never stop learning. It is. You always keep learning. What did I walk into? Walk, I told you tuned in at the right time. You're welcome, Sashi. I think you should charge the way you got the crap. Well, maybe I will. Maybe I'll change this to a somewhat of a private subscriber group. Yeah, guys. How long has this been on? Well, I go start at 3 p.m. Central on 3 p.m. Central time on Sundays. Afternoon to Mike and Company. Are you going to stream on Rumble? What are your thoughts on the stock? I don't know if I'm going to stream. I probably should, but I'm not going to get in that whole Rumble versus YouTube thing right now. I'm just trying to get this. The larger audience is on YouTube. That's the only reason. I'm not. I'm just trying to reach as many people as possible. You got some mushrooms. It was a good breakaway from everything. Enjoyed the outdoors with family. Kids loved it. Got 6 kilograms of porcini mushrooms. Oh, I love adding porcini to some. I do a wild mushroom risotto. Oh, with porcinis. I'd love some of those porcinis, Waka Waka. You can watch the replay. Just watch the replay. I actually gave a lot of good information, I think, Christo. So just watch the replay. Daniel, a super sticker. Thank you. Thanks for being me. I can only be me. Thank you. Everybody give a shout out to Daniel for the super chat. Hey, my wonderful revenue next month will go up by $20. Thanks for Daniel. And I appreciate everybody else who does the super chats also. They do not go unnoticed. Enjoy it. Yes, beautiful day. Make it private and also include trade ideas. I'll take this all under advisement. Golf clap for William's super chat. I agree. There you go, Williams. You got some claps. Daniel's super chat. Let's get. Yep. Thank you, Daniel. Good. Thank you. Tom will give a heart attack. You should block him. Oh, I wasn't even ranting on Tom today. It's just pure the scope of everything out there. With that, hey, we're going on an hour and a half on a Sunday afternoon. I'm going to wrap it up for now. I will be back tomorrow morning. You are welcome, Josh. Everyone have a wonderful, fabulous evening. If you're overseas, enjoy a very peaceful rest tonight and wake up invigorated for the European Open. Or I guess if it's the Asian Open, you're probably awake already. And everybody else, if you're in the US of A, have a peaceful sleep also. And wake up well rested, ready to tackle non-farm payroll week. I shall talk to everyone later. Well, I'm going to try to push it higher, then I'm going to dive this thing down. We'll watch the replay, Christo. You're welcome, Ramsafal, and see everyone tomorrow.